Okay, also as promised, here is another multi-time frame strategy. So as we've said in the first couple of strategies, we introduced to you some lower time frames, so 5-15 minutes, almost like day trading and scalping strategies to take advantage of some of the high probability opportunities that we do highlight every morning within the Telegram channel. Guys, we also have introduced two almost self-trading strategies using multi-time frames. So we use a higher time frame, guys, for identification of a trade, and then simple moving average crossovers to illustrate that. Okay, so we have shown you over the last couple of strategies both a MACD oscillator as well as a stochastic oscillator. What you're seeing on this chart is a stochastic oscillator, and it is only on the hourly chart. Okay, so you won't see it on the 4-hour or the 30 or the daily, etc. So it's merely on the hourly, purely because we are using the hourly chart as our identification or filtration system within the strategy. Then on the 15-minute chart, guys, that's where we're going to use a simple moving average crossover. Now, in almost every strategy that we've done over the last couple of weeks, what we have done is we have used a moving average crossover in some form, whether it be on the MACD, whether it be on the stochastic, whether it be akin to ADX, whether it be a linear weighted, a simple. We have used that particular key strategy over and over, and this is no different, guys. So this is an hourly identification and a 15-minute execution strategy. So here you can see our two moving averages, and we'll quickly pop that on there. The first one here, okay, is your longer term time frame, and that's a 15 period moving average. Okay, so there you can see it there, and this is different in that we are using an exponential moving average. Okay, so that is our first moving average. Our second moving average is a shorter time frame, very short in fact, and that's a 5-minute period, and again an exponential moving average. Alright guys, all of this does mean that we are using two of your key moving average crossover levels. You would have noticed, guys, that these moving averages are on the 15-minute chart and the 15-minute chart only. The reason being is that is going to be our execution, okay, rather than our identification or our filter. Okay, so again, a very, very easy strategy to use, guys. It merely means waiting on the hourly chart, waiting for identification. How are we going to find identification, guys? We're going to find identification with either the chart showing something above 80 for a short, which means that we have got a more than an 80% probability of being correct if we were to go short, and to go long we want something that looks like this. Okay, so below that 20, which means that we've got an 80 plus percent probability of being correct if we were going to go long. That's all we're looking for, guys. That's the identification on the 1-hour chart. So a very, very easy system to use. Secondly, guys, our filter, what we are looking for is a crossover on the stochastic. Okay, so it's a double crossover confirmation system. And what we're looking for there is, we've gone through it a couple of times. I'm waiting for that EMA crossover on the stochastic, and that's going to work as my filter. There you can see blue crosses above red to go for a long, blue crosses below red to go for a short. Okay, so we've so far on the hourly chart we've identified a reason to go long or short, given the probability of the stochastic, that being either it's above 80 for a short or below 20 for a long. Our first filter system was we wait for that crossover within the stochastic on the hourly chart. Okay. Once we have that crossover, we are then looking to drop down to a 15-minute chart and using a simple moving average crossover technique to enter into the trade. Okay, so let's just put a line here. This is for a short trade. As you can see, guys, we have got a number of things here. First things first, you can see price action momentum starting to slow down a little bit. Second of all, we've got a stochastic that has shown a very attractive probability. And lastly, we've had that crossover within the hourly stochastic. Okay, we are now ready to drop down to the 15-minute chart and wait for the execution. So here you have it, guys. Now all we are waiting for is a simple moving average crossover. So the purple, which is your shorter time frame, to cross over the pink, which is your longer time frame, and there that happens on this candle over here. What do we do, guys? We enter the trade on the very next candle. So let's pop that in there. There is our entry at 132.35. I can put my take profit above my recent high, which is here, 133.05. So we're almost looking for 70 points. Why am I looking for 70 points, guys? Just like every other system we've used so far, we're using a 1R. So the difference between the stop and the entry is 70 points. So a stop loss is 70. A 1R would be 1 times 70, which means that I'm looking for a take profit of 70 points. And we can pop that on there quickly, because that would give us 132.64. 131.64 rather. And there you can see the entry with most of the day. A day trading strategy, remember, you will be in the trade longer purely because you have used an hourly as your filter and your identification. Okay, so a nice strategy there. Let's quickly go on to a long trade here and show you how we can identify that opportunity using perhaps a different pair. Okay, so here's a nice example here, guys. An example in a downtrend, oddly enough. We can see a couple of things. We can see price could be about bottomish. We can see the stochastic is below the 20, which should suggest to us that we have got that opportunity to go for the long trade. We then wait for the crossover, and this is where you'll see the benefit of a double confirmation system. Only once we have the crossover, guys, do we go on to the 15-minute chart. By doing this, we make certain that we are sure that we have filtered out any possible negative trading opportunities. We've given ourselves only a positive trading opportunity, and then we just wait for the execution. So at this point, guys, we drop down onto a 15-minute chart. Okay, you can see there's no crossover yet, so we have to wait. The crossover has already occurred. All right, so we got to wait for the next crossover. We already know, or we're already confident that we're going to be going in the right direction. So here is our moving average crossover, purple above pink, all right, which allows us to take the trade on the very next candle. Okay, so there would be our entry. Where would our stop loss be, guys? Our stop loss would be below the previous low. Okay, so entry 197, let's call it 197.10, and my stop loss rather is 196.70. all right, so the difference between the two is 60 points, which means that I have an R of 60, just like all the other strategies we've done up to now. And what we shall then do is we will look to a 60 point take profit, which would be 197.70. okay, 1 times 60 is 60. Okay, that looks almost double. Sorry guys, it's actually a 40 points, so it's 97.50. And there you can see within the next morning we were able to get out at a very, very healthy gain. Okay guys, so again, just like the previous strategies, this is a very, very simple strategy to use using an hourly. It's got a double confirmation system in the form of 2 moving average crossovers. Remember, the first moving average crossover will come on the hourly charts. Okay. On the hourly charts within the stochastic. That is just our filtration. Our secondary moving average crossover will come within the 15-minute chart, and that's a simple price action moving average crossover. Okay guys, simple technique, allows you to identify, allows you to filter, and allows you to execute a beautiful trading opportunity. It's got a built-in risk management system using your previous support and resistance, and a 1R system just like your previous strategies. As per usual guys, the templates are included in this, so if this is a strategy that suits your personality, the template is there for you, and hopefully this may be the strategy that allows you to build a successful trading career. Alrighty guys, thanks for joining us, and we'll see you in the next series. Cheers guys, bye.